Welcome to the Northern Business Podcast. Each week we talk to people in business and the economy about the big issues that are driving growth here in the north of England. Now, we're sponsored by Virtue Motors, one of the UK's largest motor retailers. You can check out its website at virtumotors.com. That's VERTU motors.com. I'm Graham Robb. I'm owner of Recognition PR. We help scores of businesses promote their products and services. Some feature on this podcast. Make sure you don't miss an episode by subscribing on YouTube or wherever you get your podcasts. Now, down the line today, we have two people. We have John Pearce, Made in Britain CEO, and James Callaghan, Director of the Institute of Chartered Accountants, England and Wales. And then later on, my colleague Josh Havakin will be speaking to Molly Broome, Economist at the Resolution Foundation. Now, we're going to start with two sexy surveys. We don't often get those. James Callaghan from the Institute of Chartered Accountants in England and Wales and John Pearce have both got different surveys that give us a really good snapshot of the economy. And I think, bouncing on from the news of economic growth and Britain leaving recession last week, your survey, James, is really quite positive. What are its headlines?
Thanks, Harry. That's an adjective you'd use there that wouldn't normally be used with the confidence monitor, but it's good to hear it anyway. I think what we've seen...
is it true, though? Is it true, John? Is it positive?
It's definitely positive. That wasn't the adjective I was referring to. It's definitely positive. I think sort of what's really good at this time is that it's positive in all regions and nations. And there's a number of factors underpinning that. These include, obviously, sort of lower inflation. So CPI, in October was just under 11. It dropped to sort of less than 4 by January. We've seen a reduction in input price inflation and selling price inflation. There's been a massive reduction in uncertainty around energy rates. And also built into that is the expectation that interest rates will fall soon. And of course, all this lower inflation boosts spending power and consumer spirits. And I think all this is leading to positive expectations for domestic sales and growth. And it's almost as if the big dark cloud is disappearing. And the sun is beginning to shine.
I have noticed when I've been out and about in business in the last few weeks, before the data on economic growth, that people are tending to be on the ground more positive, speaking to them about the economic performance of their businesses and some of the plans they've got and some of the investments. And I think that's sexy. I think that's great. So I'm happy to say that. Now, let's talk about the regions, because your survey is of 1,000 businesses. So it's not a small survey, and it's done by telephone, so it's not just a little tick box thing. You actually do get into the nitty-gritty, don't you? So tell us about how the regions... We're in the north of England, and you've got 3 regions covering the north: North West, Yorkshire, Humber, and North East. Well, what about those regions?
Well, I think it's, if you look at, each region individually, different regions will respond differently in terms of confidence, and that's a reflection of the businesses and the sectors in those areas. So, for example, manufacturing and exporting are key sectors in the North and Yorkshire and Humber. And if you look at Q4 last year, confidence was quite low in those areas because at the time inflation was much higher, there was more uncertainty, and the prospects for growth were very low. And as you mentioned, at the time the UK was actually in recession, even though it was a mild one. But, since then, the UK GDP has improved. There's growth in the US and the Euro area, so the prospects for export growths are much higher. And similarly, as John will probably come on to it, manufacturing, it's the same with that again. So coupled that with lower price inflation, we're seeing sort of increased confidence from businesses.
There is
expect growth to accelerate in the next 12 months.
Well, we hope it will. There is a little bit of a differential between Yorkshire and the North West and the North East and the rest. Everyone's positive, which is good, but there seems to be a real dynamism in the responses you're getting from businesses in the North West and Yorkshire. The North East, similar to the national average, really.
Yeah, I think that the North East is just slightly below the national average, whereas Yorkshire and Humber is actually at the highest. It's really bounced back, because I think 2 or 3 quarters ago, Yorkshire and Humber was the lowest. But again, it reflects the makeup of the sectors and businesses in those regions.
Now, you don't just look at the headlines; you also go below the headlines, and you're asking the businesses, and these are real businesses that are audited by your members. They're not just sort of tick box exercises, as I've said. What the issues that they face are. What are the potential obstacles to them growing? What kind of results did you get on that?
Well, what we've done is, and we've been doing this survey for the past 20 years, and we track sort of a number of issues, and we see sort of which ones come to the fore. So again, what's reflected in this quarter survey is that regulatory requirements remain the top-cited rising issue, but they're predominantly concentrated in areas that are already highly regulated, like banking, finance, and insurance, energy, water, and those kinds of sectors. And that would include sort of regulations around increased admin and reporting requirements. So that is the main rising one, but there's still issues around customer demand and competition. They still remain prominent.
Now, customer demand, that I suppose looks at how much money people have to spend. I was just talking to the chief executive of this sponsor, the Virtue Motors, sponsor this podcast. They've delivered their latest annual results, very good profits. But in the sale of new vehicles, it is the trade. It's basically lease cars and so on to commercial people that are buying new cars. Customers, man in the street, woman in the street, not as much. So there is still, I suppose, a lagging pickup on consumer spending. Some of the tax cuts haven't come through yet. The Bank of England's been resistant, in my view, too resistant to cut interest rates. So that hasn't yet taken off, has it?
No, and it will take time to filter through. But once inflation keeps to continue to drop, and once the bank then drops the interest rates, people will feel more confident to go out and start spending again. But at the moment, people just don't know which way things are going to go. There's an expectation that the rates will drop, but the question is when.
Okay. Now, you hold on there, James. Let's bring in John. John's the chief executive of Made in Britain. Now, by the way, for viewers of the programme and not listeners, I've got my tie and suit on today because I'm going to the Make UK annual Northern Dinner tonight. So I was looking at the details of manufacturing in Britain, knowing that you're coming on. Make UK and Made in Britain are slightly different. We'll explain the difference in a minute. But when it comes to manufacturing, the data was pretty strong. The GDP figures published last week said that manufacturing grew by nearly 1%, 0.8%, and manufacturing grew by 1.2% last year, which beat the whole of the economy. And if you look at vehicle output was 14% higher in February this year than last year, and commercial vehicle output was the highest it's been since February 2008. So there seems to be in manufacturing a bit of a lift-off, a bit of confidence and a bit of additional output. John, are you seeing that through your members?
Our members, all 2,073 of them, are always confident. I mean, we are
very good.
We are the organisation that galvanises all of those successful, brilliant manufacturers in the country, and we do have them all in the same place so that people can find the things that are made in this country. And I would define them as an optimistic group. I mean, all businesses have been taking a lot of knocks the past few years. It is the sort of hermit crisis that you hear about. But the difference, of course, with the manufacturing sector is that they are used to getting through tough times and for taking the tough long-term decisions to make sure they get to the other side of the crisis in good shape. And I would say, I don't know whether these results are necessarily saying that all is well and all is fine, but they are confirming that we need a strong, healthy manufacturing sector with stability in the economy, stability and confidence in society in order to make the choice to buy something that is made much closer to where it's needed. And in the case of commercial vehicles, I mean, that's a good example. Vauxhall are a member of Made in Britain, and every Vivaro van that you see circulating that's been made in the past 9 years is circulating with the Made in Britain badge on the back, and that helps people to make a decision about buying a commercial vehicle that is made in this country, made close to where it's needed. So, there is a lot of good news out there, and I think the other thing about manufacturing is, of course, is they're very transparent businesses. We have a news service for all of our members, and they are telling us in 20, 30 different new positive news stories, successful actions in manufacturing. They're explaining exactly how they're succeeding and why we should all be thinking about choosing something that's made in this country first.
Okay. There's a little interference on the line, but we'll stay with you because we'll be able to put up with it for the time being. Now, let's talk about your organisation. I mentioned Made UK, which represents manufacturers, but maybe in a different way than you do. Your representation is about badging up the Made in Britain brand. Tell us about how you work with your members.
Well, a simple difference is that Make UK, of course, are the strongest lobbying organisation in the country. They lobby on behalf of all of manufacturing. We're not a lobby group, but we do want everyone. Let's put it like this: we lobby on one topic, and that is buying more Made in Britain products. We are actually the good news people. We are defining where the products are, who's making them, and what products are made in this country with the registered mark. And we work very closely with Make UK in promoting the manufacturing sector and reminding people of how important it is that the sector is supported economically and socially. But then the general public, of course, need to make a decision to buy something, and we help them with that decision by putting the Made in Britain mark on all the products that are qualify for membership. Obviously, you've got to be a manufacturer to qualify, and then to put the mark on the product helps the general public and the government, of course, know what's made in this country and what isn't. And that's an important part of supporting the future of economy, especially a green economy. If we want a cleaner, greener, more sustainable, more socially responsible economy, then buying something that's made in Britain is a really good start, a really good choice for us to make.
Now, you've done some research as well. I said it was sexy surveys time. You've got a survey about the brand Made in Britain. I'll flash some of the remarks up. I'll read them out for our listeners. Almost half, 47% of people are more inclined to buy a product when they see the British flag. There's a logo behind you on our screen. Almost 6 in 10, 57%, say they would prefer to buy British-made products. 64% say they'd buy British-made products because they feel it's important to help the British economy, that emotional connection you talked about. And just over half, 51%, of businesses have introduced measures to help their employees with the cost of living crisis so they can buy these products. But one of the interesting things is, a bit of research I saw is that sometimes people are willing to pay just a little bit extra to get it British.
They are. Yeah, we've been tracking this now for a number of years, and every time we go to the public to ask them what they think about their choices of buying something that's made in this country, we're seeing that those numbers are creeping up every year. So we obviously monitor the recognition of the mark. That's our main purpose of surveying the general public. But we also speak to business on the recognition of the mark. And in that space, B2B recognition of the Made in Britain mark is now at 8 out of 10. So we know that businesses are choosing to procure things from members of Made in Britain. And uniquely, of course, the other thing that we're measuring in our organisation every day of the week is that propensity for collaboration with manufacturing across all different sectors. We do have the benefit of a diversity of membership across 50 different product sectors, trade, industry, included in the same group that are of companies that are making tables and chairs, shoes, vans, with those industrial members, and putting them all in the same place and saying, the key questions: are you procuring more products, more components, more machinery? Are you choosing to procure more things that are made closer to where your business is? And is that propensity for procuring in this country going up every year? And the great news is, perhaps this is your sexy news, the great news is that number is going up every single year.
And it's more it's security of supply as well, isn't it? It's not just an economic issue. Security is important.
Absolutely. And security, of course, is coming to the fore every time we read the news, and there's something, these externalities, as the economists call them, they have an effect on opinion, and they have an effect on people's choices. If we want to make a resilient choice about a British manufacturing purchase, then you can go to the Made in Britain website, madeinbritain.org. You can find 2,000 manufacturers that are making something, and in most cases, you can actually go and visit their premises. And that's a resilience check for the economy and for the public that you just simply don't get anywhere else. That transparency, we're sort of, turning that into a major asset for the economy so that people know what to buy.
Now, I know the website, but one of our clients at Recognition PR, EBAC, is a member of yours. They're the only British manufacturer of washing machines, so that's pretty good. Now, can I just ask you about sovereign capacity? Now, at a big scale, that could mean the defence industries and having shipyards to build warships, or it could mean having the ability to build our offshore wind farms and having the government agree that if you're going to have an offshore wind farm built, they've put in the law that 60% of the supplies should be local, that's made in Britain. But I was talking to a manufacturer of a consumer product who couldn't buy motors in Britain. If we don't have the government protect our sovereign capacity, not do it at all costs, but do it as a matter of principle, then it will wither away, won't it?
I think the government, at least in our communications with them, we do speak regularly to the Department of Business and Trade and to the Cabinet Office, and there is a bill going through, the procurement bill, which we hope will have a very positive effect on the attitude towards and the importance, actually, of procuring goods, all goods, for government. The government spend an awful lot of money on a lot of things, the NHS in particular as well, spending a lot of money on let's call them mundane things, sort of supplies of things. But in the case of the pandemic, of course, the supplies of absolutely essential PPE suddenly became a hot topic because we realised that we weren't making much of it here in this country. And I think the mood music, certainly that we hear from our surveys, or at least the reported attitude towards buying things and procuring things in this country, I think is definitely moving in the right direction. But to be really frank about it, I mean, we'd like it to be more and more every year, because the reasons for buying something that's locally made go much deeper than just for patriotism. We are talking about a social and economic and environmental responsibility to buy something that is more transparently made and made by a company that is ticking all of those social economic responsibility boxes. And I don't know about you, but I would rather know that there's some, I'd rather buy something with a clean conscience, knowing that the company that's made it is actually taking full responsibility for that thing and for the longevity of the product as well, which is something that we look very strongly at, as well as the longevity of the business that's made the product. How long is going to last the product that is actually made by them? And this all fits into a really interesting matrix of overall business responsibility for contributing to the British economy.
James, just to wrap up this section, when you're making your own purchases, do you think like that? I'm looking what I'm dressed in today. I've got shoes that were made in Northampton, a suit which cost a bit more but was made in Britain with Huddersfield cloth. I don't know where my shirt was made. I know my tie's French, so I'm 50% of the way there. I won't get into my underwear, but that's another matter. Do you actually, as a day-to-day occurrence in your own life, look at what you buy and where it's made?
Absolutely. I buy my shorts in Jermyn Street in London. I normally buy my shoes from Northampton, Lokes.
Yes.
My favourite brand of shoes.
Yeah.
fantastic. They just go on for years and years.
And they last. That's the point.
Absolutely.
It's not spendthrift doing it. It's actually a long-term.
Well, the phrase is you buy cheap, buy many times.
Yes, that's right. Well, look, I think we'll close this on a measure of agreement. Thank you, James, for getting us going with your excellent survey. I'll bring you back again and hope it's still going well. And John, best of luck in helping your members sell British products. And I know you're in Northern Ireland talking to us from a conference there. And all the best to you. Thank you very much indeed.
Thank you very much.
Now, let's go to my colleague Josh Havakin. He's been talking to Molly Broome, who's the economist at the Resolution Foundation.
Thanks, Graham. This week, I'm joined by Molly Broome. She's an economist at the Resolution Foundation, and she's here to talk to us about the Resolution Foundation's new report, which looks at housing and home ownership, specifically amongst young people in Britain. Molly, thank you very much for coming on the podcast.
It's great to be here.
So before we get started looking or talking about some of the findings of this report, it focuses on young people. I wondered if, for the audience, you could probably define what a young person is in terms of this report and housing.
Yeah, so a lot of our research focuses on generational differences. So we look at differences among the baby boomer cohort, Gen X, and millennials. But specifically for this report, young people are defined as families aged 19 to 29.
Okay, so we're talking about people who are under 30 but over 18. Now, you're looking at the differences between these different generations, and obviously people have experienced different levels of home ownership over the years. How has home ownership in that age bracket changed?
Yeah, so we've seen big changes in youth home ownership over the last 60 years, with youth home ownership rising quite rapidly in the 1960s, 70s and 80s. But since then, we've seen long-term decline. In fact, the share of families aged 19 to 29 that owned their own home fell from around a quarter in the late 1980s to around 14% today. And the main reason for this decline is that houses have simply become less affordable, as we've seen house price growth outpace earnings growth for decades. As a result, employees today could expect to spend around 8 times their annual earnings on buying a home, compared to just 3.5 times in the late 1990s.
So less people able to afford their own homes, presumably less people therefore having their own homes. What are the consequences of this for these families as they kind of grow and mature? What does it actually mean?
So house price growth outpacing earnings growth for decades has meant that it's much harder to save for a deposit.
Mm-hmm.
The estimated time it would take for a typical young family to save for a deposit today stands at around 14 years. And for comparison, this figure was around 8 years, in the mid-1990s.
Almost.
Pardon?
They'd almost double. Almost.
Yeah. And what this means, and for those that have been lucky enough to buy a home and get on the housing ladder, they've also had to stretch their incomes much further than they have in the past, which means that young first-time buyers are much more highly leveraged today than they were even before the financial crisis. And then the final consequence is that those that are locked out of home ownership because of these affordability issues means that they're either left with the option of privately renting, which we know has problems around affordability and security and quality, or they have the option of living at home with their parents.
So one of the phrases that I see it bounded around a lot less now than what I used to is the bank of mum and dad, getting onto the ladder with some help from parents. Now, with the rising cost of living that we've seen and some of the other consequences that you've discussed, I'm assuming, and I think it is in this report, that more people are living with family for longer. And I expect, when we're talking about families, you've maybe got 3 or 4 generations, maybe even sometimes living under one roof. So have we gone from the bank of mum and dad to the house of mum and dad?
I think that's a really good way of putting it. I think the bank of mum and dad is definitely still an important part of people pulling together a house deposit, and we've seen that that's becoming increasingly important, particularly after the pandemic. But we are seeing an increase in the number of people also choosing to live with their parents. So we estimate that around a third of under 35-year-olds live at home with their parents, and this has been increasing in recent decades. And there are advantages of living at home with your parents. For instance, opting to live at home instead of in the private rented sector means that people can perhaps save for a house deposit more quickly if they're not having to meet their rental costs. But there are also big disadvantages that we should highlight. For example, being locked out of home ownership because of affordability problems, but also in the private rented sector because of really high rents, means that young people are less economically mobile than they were in the past, which means that they may not be able to access better job opportunities in other areas, which will hold down their earnings potential and potentially their long-term living standards. So in other words, it's great if your parents live in and around a major city with lots of job opportunities, but it's perhaps not so good for young people that whose parents live in a rural location where the job opportunities perhaps aren't as good.
We've talked a lot about the consequences of some of the findings of the report, and question to ask an economist, because I'm sure you'd like to do all kinds of things, but what are some of the recommendations? What if you had a magic wand, Molly, what would you wave it and have policymakers and I suppose maybe house builders and landlords, what would you like to see happen?
Well, increasing supply is definitely one part of the solution, particularly in areas where demand is greatest, so in and around our core cities. Increasing supply would eventually help lower prices and make home ownership more affordable, but that's clearly a long-term strategy. So we also need to look at improving the alternatives. So, for example, improving the quality, affordability and security of the private rented sector, which a quarter of young families live in. But there are also other options as well. We should probably look at our tax system and how we can change that to make the housing market more efficient. Our main property tax, council tax, is in urgent need of reform. It's highly regressive. It's based on out-of-date valuations, so it's no longer fit for purpose. Reforming council tax would be a huge undertaking, but given that it's becoming increasingly important with council tax bills going up for most people in England and Wales, it's definitely worth getting it right.
Absolutely. Well, Molly, thank you very much. I mean, there's a lot in this report. If somebody wants to go away and read it, it's on the Resolution Foundation's website. Probably the quickest way to do it is just search the name of the report, the Resolution Foundation Housing Outlook, Q1 2024. So thank you very much for coming on, and we're going to go back to Graham now.
Thank you, Joss. Thank you, Molly. Now, if you'd like to join us as a guest on Northern Business Podcast, do get in touch. You can contact us at Recognition PR. Find us on the internet, recognitionpr.co.uk. We'd love to hear from you. Also, thanks to podcast producer Harry Sinclair and technical operator Robin Campbell. Join us next time for the Northern Business Podcast. Don't miss an episode. Like, rate, subscribe on YouTube or wherever you get your podcasts.